Welcome to Dur Sabah.
Welcome to Brightcom Group's investor conference call. Please stay connected. Your conference will begin shortly. Welcome to Brightcom Group's investor conference call. Please stay connected. Your conference will begin shortly. Welcome to Brightcom Group's investor conference call. Please stay connected. Your conference will begin shortly. Welcome to Brightcom Group's investor conference call. Please stay connected. Your conference will begin shortly. Welcome to Brightcom Group's investor conference call. Please stay connected. Your conference will begin shortly. Welcome to Brightcom Group's investor conference call. Please stay connected. Your conference will begin shortly. Welcome to Brightcom Group's investor conference call. Please stay connected. Your conference will begin shortly. Welcome to Brightcom Group's investor conference call. Please stay connected. Your conference will begin shortly. Welcome to Brightcom Group's investor conference call. Please stay connected. Your conference will begin shortly.
Your conference is being recorded.
Good morning, ladies and gentlemen. I'm Kritika, moderator for the conference call. Welcome to Brightcom Group Limited Investors Conference Call. The duration of the call will be for 1 hour. We have with us today Mr. Suresh Reddy and Mr. Y. Srinivas Rao. At this moment, all participants are in listen-only mode. Later, we will conduct a question and answer session. At that time, if you have a question, please press star and 1 on your telephone keypad. Please note, this conference is recorded. Before we go ahead with the conference, Brightcom Group would like to mention that during the conference call, certain statements in this call reflecting Brightcom's future growth prospects or forward-looking statements, which involves a number of risks and uncertainties that could cause results to differ materially from those in such forward-looking statements. The company does not undertake to update any forward-looking statements that may be made from time to time or on behalf of the company. Now, I hand over the call. I forward this call to Mr. YSR, who will update us on the financial aspect of the call. Thank you, and over to you, sir.
Thank you, ma'am. Thank you. Good afternoon, ladies and gentlemen. It is a pleasure to speak to you all. In Q2 of financial year 21-22, I briefly give the financial data of the company. On consolidated basis, the revenue for quarter 2 of financial year 21-22 was 1,104 crore, registering a growth of 73% on year-on-year and 69% on quarter-on-quarter. The EBITDA for quarter 2 of financial year 21-22 was 350 crore, registering a growth of 71% on quarter-on-quarter and 76% on year-on-year. Tax for Q2 of financial year 21-22 was 212 crore, registering a growth of 106% on year-on-year and 101% on quarter-on-quarter. Revenue from digital marketing segment for Q2 of financial year 21-22 was 1,014 crore, registering a growth of 79% on quarter-on-quarter and 82% on year-on-year. Profit before tax from digital marketing segment for Q2 of financial year 21-22 was 290 crore, registering a growth of 103% on quarter-on-quarter and 105% on year-on-year. The revenue from software development segment for Q2 was 89 crores. This is the brief picture of the number. We have received some questions remain. Out of the one is regarding receivables. When we come to receivables on consolidated basis, the total receivables as of 30th September 21 was 1,411 crores. There is a slight increase in receivables. The reason is due to increase in volume of business. The revenue has gone up by more than 70% compared to the previous year. So proportionately, the AR is also increased. If you see the total receivable, out of the above 530 crores are pertaining to the September sale, which is about 31% of the total receivable. And 330 crores is pertaining to 30 to 60 days, and 207 crores pertaining to 60 to 90 days. Out of the total receivables, about 70%, that is 1,058 crores is pertaining to the recent sale, which is going to be realized in the next quarter. This is briefly about National. I hand over Mr. Suresh Kumar Reddy, Chairman.
Thank you, sir. First of all, welcome to this quarterly call. It's a pleasure to invite you all. Today, I think we have over 300 people, probably one of the highest attended as far as I can understand. Hello? Yes. So now, are you able to hear me? There is one moment. Let me just check that. One moment.
Ladies and gentlemen, please stay connected while we connect back the speaker. Welcome back, sir. Please go ahead.
Yeah, thank you. My apologies. There's a technical difficulty more on my side than the system. Some issue with my phone, I guess, today. Getting a lot of calls from Amazon delivery people. So anyway, coming back to the call, I'd like to invite everyone onto the call today. Appreciate all the support from investors for years. We've been doing this call every quarter, and it is a pleasure to announce that we've had one of the best quarters, strongest quarters ever in the history of the company last quarter. So we're very excited about where the company is growing, where the industry is, and I'll talk more about different aspects of why we are seeing this kind of growth. For example, consolidated revenues for the quarter compared to last year, we did about 73%, and PAT was almost doubled, more than doubled compared to last year. Another big parameter that we would like to watch is ROE. Return on equity on an annualized basis. We have reached 16.45% approximately, and we are tunnel focused. Extremely important ratio this would be going forward. We will completely focus on this to make sure that this is an indicator of improvement of our efficiencies. So this is something that we have taken it upon ourselves going forward to watch this carefully, and I will talk about how and what things will happen as we go. And then another big point that we need to bring forth is our tax rate, or consolidated tax rate, because of our global presence across the world is about 27%. And compared to the leaders, I won't name names at this point. We are definitely rightly positioned, and we should look at better improving of these the revenues in the right places to actually get this better as well. But that said, that's the approximate range in which the numbers are, where they stack up today. Now coming to what happened, what were the different reasons of this growth in this particular quarter and going forward? Most important thing, post the pandemic, if you look at 2020, what happened is more and more people have started to spend time with their digital devices, spending time on digital media, watching entertainment, doing things on digital and online stuff. So this has actually changed the way the world is working in terms of your time spent during your free time. So we saw a huge, while there was an initial hiccup in early 2020, but then, it took off in a large way. And it has been extremely, it has kind of taken over the entire industry in a very large way. And so the traffic went up. The traffic across the different networks went up significantly, which is why we have seen, we used to do about 30 to 40 billion impressions a month. Now we're actually even getting close to 70 billion impressions in a good month. An ad impression is basically an opportunity to run an ad. So that just gives you so many places where, we can find a slot for products and services to be sold. So it's a big opportunity for the space. So that has been one of the big drivers. And post this, couple of waves of the pandemic, things have now started to improve. People have accumulated more money because they have not gone out, I guess. There's more sales that are happening. So that has also helped the entire industry in a large way. Another big driver has been filtering technology. I'll just touch on it. This is an important aspect of digital traffic and how it is monetized. Like any other industry, there has always been some, spurious traffic, artificially created traffic called the bot traffic. And the players in the space all teamed up to fight this. They came up with some of the best tech tools to filter out spurious traffic and actually come to the real people, real visitors, and remove all the, robotic-based, bot-based traffic that is outside. So that has been cleaned up, and that technology has reached a steady state. And so now the CPMs are better off, lot better off, because the ads are working a lot better because they're going to real people. So that has also helped a lot. So all these different market-based things have helped. Plus, from the company side, we have been quite aggressive in actually going out with a lot of relationship building in terms of ad agencies. We reached a number of 200 ad agencies, and in fact, we crossed it last quarter or so. And now we are continuously improving more on the demand side. In fact, one of the questions that came up were, how are you doing on the demand side, which is where we find the advertisers for our publishers. So that has been a very important contributor for the business to move to a different level of a steady state. Then other things that have, like any other quarter, we've always been upgrading our tools. This specific time frame, the Compass and the Brightcom tech tool improvements have brought in significant operating efficiencies. So it's almost like a lot of things came together, which really helped. And then most importantly, our epicenter of traffic management, which was the Israeli entity, Brightcom Media, as they come out as themselves as a brand. But it's the legal entity name is OMS. It's a 100% owned entity of Brightcom, the parent. And it's currently audited by OMS. Almost more than 40% of the revenue is coming through that. And it's the efficiency and the way things have been put together, they have really helped the entire company do much better. So this is broadly the driver side of the business. Then coming to the outlook itself, it's like I said, the ad tech business itself, we are seeing a much more stronger outlook coming out from various analysts across the world. But it remains to be strong for the next so many periods coming forward. And we will continue to focus on two things, technology and people. Those are the two things that we will focus on. Those are the things we'll continue to build on. So on the technology side, we are always working on the bigger, better technologies, including some of the tools that we are coming out using artificial intelligence, AI, ML-based technologies that just take the entire ad tech solutions to completely another orbit. So we are very gung-ho on some of the products that are coming up, and please watch this space for some really cool stuff coming out going forward. And people-wise, we have been actively looking for senior leadership to get the company ready for the next level. So in this endeavor, we've already brought in two strong leaders. Our board director, Peshwacharya, he's consented to come on board. Now he's heading and managing strategy, and we're working very closely. He's bringing a lot of new ideas into the business and bringing a lot of his experience into the play. Then also we announced Satish to help us on some of the new initiatives from the inorganic and a new area which is audio advertising. So Satish Chiti, who was the CEO of Ramki Recyclables, has come on board as well. So very, very happy to bring these two leaders. And we will start looking globally also to start bringing more leaders to increase the management bandwidth. We do have a very strong bandwidth, but we need to prepare for the next level of the business. And the technology-wise, like I just said, we will continue to start looking at what are the critical pain points in the ad tech industry. How do we address them? We have the best brains working on that. So we are quite excited about some of the ideas that we are, going after. Now, coming to the numbers. So we have started to put a lot of emphasis on two things, primarily two things. One is free cash flow. Two is ROE, like I mentioned. Free cash flow is a clear indicator of a strong business. While we've not been great with that in the past due to a lot of reasons which we have explained in the past, but now is the time, and which I've always said, once we cross the 500 million, annualized revenue spot, that's when the free cash flows start to really pile up. And so we are very excited, and we will watch this and we will report this. And we'll give you a sense on how it is going. In fact, we did have it in the MD&A part of our results publication this time. We are expecting a minimum of 250 crores. It is not that is the amount, but that is a minimum of 250 crores by March 2022, and then another additional 250, again, minimum of additional 250 in terms of collection and flow of cash the quarter after. So like I said, we are completely focused on bringing significant shareholder value by doing these two things, free cash flow generation and increasing ROE. ROE is again an indicator of how efficiently your system is working. It is basically a direct reflection of how well the management team is doing in terms of using the best use of especially capital efficiency of the company. That said, we will also be very, very there are a lot of areas of improvement we do realize that the company needs to focus on. We are working on improving, we are looking at taking a lens and looking at how the accounting policies are there. We are looking at how we can make things easier and more transparent, improve governance, so that the stakeholders have a better sense of where the company is and where it is going. So this is another big area that the corporate team is looking at for a while now. So these are some of the main points that I wanted to bring forth today. It's nothing different than what we've already talked about. But that said, these are important things for the company. There are a few questions that came. I'll try and see if we can address them, and then we go to further questions into the, receiving from the people who have dialed in. So let me see the question list here. Please hold up. Yes, there's been a question about the guidance numbers we gave for the coming quarters. They're asking if there are any changes. As of now, we don't foresee any changes. It looks the outlook looks very strong, and we will continue to keep the guidance numbers as they are. I think there was one question regarding, can you give guidance for quarter one of next financial year? I don't think we will want to do that yet. We will probably, wait after the December quarter, then look at how things look in the next calendar year. This quarter that's coming up, as it has always been, is the largest quarter in the cyclical nature of our business. So the team has been tunnel focused on trying to get this done. So we'll have a much better sense on which orbit we have landed in post this entire change in the mindset. There's a question regarding Google MCM partnership has been fantastic for us. The question is regarding has the new traffic factored in the MCM partnerships growth? No, I think that will start kicking in the coming quarters. You'll start seeing more business, more traffic flowing through our system due to this partnership. Then coming to next one is question regarding AdOps figures. See, AdOps figures, again, this is a third party that publishes on how many publishers are using our system, how many are on our system, how much traffic is flowing through. There has been a huge surge continuously for the last 1.5 years, and I think some of the very active and smart shareholders have been monitoring this and putting this on Twitter. It's hard to tie a business health using AdOps numbers, to be honest, because this is just, it could be somebody with a very small traffic number, or it could be some very large one. The more important thing to watch is number of ad impressions that you have, or ad serving opportunities that you have, which will help the business. So I would be more happy on looking at that as a parameter as opposed to AdOps figures, but it just gives you a general health condition. Then coming to a couple of more questions, there is a question regarding Local, our product which is related to newspapers in the US has been doing extremely well again. I did not mention it this time because there are so many things and we cannot come to it. So the question is, are you going to bring that into other countries, maybe in Europe or South America or even India for that matter? The team is working on a lot of ideas. Please watch this space. As any developments evolve, you will be the first to know. Coming to the next question regarding who are the players you are working with right now in terms of audio ads. So there is a lot of larger players that have evolved. For example, Cat is one out of the US, holds a lot of radio stations. They've been doing extremely well with control of audio, digital audio and terrestrial audio, and doing a very smart job of how they're handling it. We work closely with this team. Then there's iHeart Media, which is again another fast evolving audio player. Of course, Trade Desk is another evolving player in the audio ad. Audio ad overall has been a new kid on the block. Lot of things that are very interesting there. I'd just like to share a couple of them. Something about audience measurement is an interesting angle there. So how do you actually ensure how many people have listened to say a radio program that is running in a public place, which is digital? If it is a single individual who's listening to it, then you count as one. But if it's in a public place, how do you measure it? So for which that makes it an interesting way to how do you get a sense of the reach of a certain ad. So that's an area that a lot of people are working on, and we are working as well. And we hope to have some interesting developments on that space. Next question is regarding Indian acquisition that we had announced. The DD is complete, both the legal, financial, and business DD is complete. They are doing extremely well. In fact, during the DD period, like I mentioned in the last call, their numbers have gone up. So we are working with them on getting all the the papers ready, legal papers ready, getting the SPA and all that cool stuff happening. These things sometimes do take time because of some nuances in terms of what goes into the agreement, and which we understand, and we should have an announcement for you as soon as we have That's for signing. It will be a two-stage process. We will sign first, and then we will close after, maybe a couple of months after that, in terms of final closing, just to ensure smooth transition. So that is work in progress. There is also a question regarding the attrition rate of IT industry, how it is impacting us. Yeah, the whole industry is impacted, but we position ourselves less as an IT company, more as a digital marketing company and an internet-based company. We've great platforms and we have global workforce, and so it is okay. We are able to manage that very well, and we will start looking at hiring more going forward. We may bring in some fresh, lot of fresh minds out of college as well. This is something that has been discussed by the operations guys in India. The next question is regarding NFT and other digital assets. How are we viewing that? It's a brilliant area, how it's evolving. Yes, like we always talked about even, 5 years, 10 years ago about how, cryptocurrencies and things were early stage evolving. This is again something to watch closely. Are we going to get into it immediately? No. We're going to watch it very closely. Yes. Then there is a comparison with reference to athletes that they use cost per acquisition model, and why are we using that or not? Let me give you a little sense on all of us use all models for revenue generation. In terms of how the pricing is done, there are three basic models. There is cost per impression, which is CPM model, cost per click, and cost per an acquisition or a lead, or however you want to call that. And if you want to compare an equivalent in terms of an automotive car or something, CPM is basically like Mercedes-Benz. Okay. And CPC is like Toyota, and CPA is like Maruti. And we drive all three based on the market conditions and what we can get our hands on. We are not close to any, but from a digital marketing agency or a network perspective, if we are able to get more CPM, that shows that we are in the top, layer of where the business is conducted. So that's the best way I can, articulate that to you. And then there is a few more questions, and I should be done. Pardon me, this has been a long list of questions. Okay. There is a question regarding, do we need to strengthen our demand side? Are we a DSP or an SSP? We have actually, while we have a very strong SSP offering, which is supply side or where we get the publishers, and there is our core strength from the beginning has been our strong relationships globally, not just the US or Europe, globally on the demand side. Well, we work very closely with ad agencies and direct advertisers. So we try to grow both of them together because we would like to have a full solution as opposed to have something with one inclination or the other. That said, we are known in the market as somebody who brings global advertisers or publishers who have traffic coming from across the globe. So that is a very strong position we've had for years, and that continues as well. There are a couple of questions on privacy, that iOS versus Android. What is Android? Do you think Android will improve their restrictions on privacy? I think it's all a matter of time. It will all happen, and I don't think that will impact advertising by any way. It will just take different forms, and obviously these are all permission-based, clean advertising solutions that we are all working with. There is a question regarding when is our AGM and when is our annual report coming out. I think we'll have answers for that fairly soon. Maybe in a week or two we'll have those announcements coming out. Headwinds for ad tech has been extremely strong, and we will continue to ride this. And it is not a one-time blip. Let me be very clear. It is a complete change in consumer behavior, and it is a clear upgrade to the next orbit across the world, and we are all trying to keep up with the amount of business that's coming through that. So it is the best thing that a business can ask for, and we are extremely happy while we are super busy. All of us have been super busy trying to take this on. Then there is a question regarding the Lycos settlement. Yes, it is. Like I've said for a while now, it's been settled. We just have to sign the paperwork. We have been talking with Dom. We should have that announcement maximum within 3 months, not beyond. It should be done. And there is a question regarding promoter pledges. I think it's the promoter's call to talk about it. I'm here as the manager of the business, so I leave it at that. But it is dropped significantly low. People have financial needs, so obviously these are connected to that. And since the price has gone up, we won't need to pledge as much. So the pledge levels have gone down. Nothing much on that. And the question regarding free cash flows, does this include the new acquisitions? No. These are based on current numbers, current business alone. So again, I'd like to close this by saying, if you want to take home 2 points home, one is ROE, two is FCF. ROE, return on equity, FCF, free cash flow. We are tunnel focused on this. We are working hard to make your company better. Improved governance, obviously, is the gravy on it. Thank you, and I'll open up for questions.
Thank you, sir. Ladies and gentlemen, we will now begin the question and answer session. If you have a question, please press star and 1 on your telephone keypad and wait for your turn to ask the question. If you would like to withdraw your request, you may do so by pressing star and 1 again. We will wait for a moment while the question queue assembles. Ladies and gentlemen, if you have a question, please press star and 1 on your telephone keypad. First question comes from Raymond Mahmeda, an individual investor. Please go ahead.
Hi, Suresh. Nice
Hi, Ray. How are you?
Again. Yeah, I'm
good
doing
to have
good.
you back on the call.
Yes. Heartiest congratulations to you and your team for the tremendous performance.
Thank you.
I have a few questions. The first is that, it's more of a request. Can we have a higher level of granularity in terms of segmental reporting now that our turnover is crossing 1,000 crores? It would be nice to have some kind of segmental reporting on the various aspects that we spoke about. For instance, from the supply side, from the ad exchange side, from the Google partnership. I leave it to you, but at least at one level below this.
Yes. Point taken, Ray. We will look at it. It may take us another quarter because we have to set systems across the board. But point well taken. Well, good point. And we will, in fact, with audio and other acquisitions coming in, it becomes inevitable that we have to do it. So we will surely start looking at doing that.
Sure. Thank you for that. And recently, Google, there was a news in the media that Google has decided to pay some of the publishers, at least in some geos. Do you think it is a trend which we need to be worried about, or it's a healthy trend, or how is it going to impact us?
It is like every other industry, Ray, consolidation is part of it. Just to give you my standard of auto industry, they say there was a point where there were 1,000 auto companies in Detroit area, maybe at least a few hundred, if my numbers are right. And eventually they all consolidated into 3 big entities. Similarly, it's going to happen with respect to publishers. We used to have a lot of long tail publishers, and now over the years, even for the user, people have started to pick and go for certain things to certain publishers. So that consolidation is inevitable. I think Google's move is completely justified. It's an expected thing. I won't say it is unhealthy or healthy. It is a natural progression of the how things are moving forward.
Okay. Thank you. And tremendous improvement on the cash flow front. It appears that we have come to the point of a J curve, actually. I don't know if you would want to agree with that. But I have one question here. The question is, we need money for organic growth, and we also need money for inorganic growth, wide acquisition. So, how do you plan to juggle these two going forward?
It's again, this is a very good question. Something that I think most of management has to think through. Where a business area can be built internally, organically, and without loss of time, without loss of opportunity, that is the way to go. And places where time is of essence, where you have to take on a certain area which is important for the overall business to remain a significant player, then we start looking at inorganic solutions. And or if there are areas that you don't have expertise and you would like to buy that, then you look at inorganic. So that's broadly said. Coming to the cash flow part of it, how do we actually, organic side, we do have, there is a head, whether they call it intangible assets, product development, whatever you call it. Every tech company has to spend money on working towards setting aside money for building products to stay ahead of the curve, beat the curve, and continue to grow. So it's very important, which is what we have continued to do. In spite of difficult periods in the past, we never took our eye off improving technologies and staying ahead of the curve, which is why today we are reaping the benefits, while it was tough during that period. The same mindset, the same way of doing stuff will remain. Then coming to the inorganic side, how are we going to fund it? So our first step is to, we do not want to dilute too much. Yes, we have had to do a little bit of that. One for, value determination, making a point that this is a valuation at which, investors are ready to come and such. We do not want to dilute much. And we would try to use as much internal cash as possible. We may take some sort of a short-term bridge, which will come in and will be cleared by cash flows going forward if the acquisition is large and important enough to be done. And the next stage is we look at dilution at the subsidiary level. We have all our subsidiaries today are 100% owned by the Indian parent. And like I have said in the past, we want to put these under one large subsidiary, and we might do some dilution at that level. Maybe not immediately. We have been getting a lot of inbound calls, especially listing in different markets, and maybe looking at like SPAC, various different vehicles that are coming at us. And I think now more than ever, because we have seen this, a lot more interest that has evolved into our company. It's all good signs, but we are not going to do anything in a hurry, because it's important to ensure, like I said, coming to, return on equity and, those efficiency parameters and keeping the EPS at the level it should be. We are going to be really super cautious on any dilution attempts. So broadly, that is the strategy. And we have a decent sense on when the money is coming and what steps should be taken at what time. We will, as they culminate into a concrete step, we will immediately inform the market.
Thank you so much, Suresh. One final question,
Please.
Which is, it was very heartening to know that that the revenues from the MCM side haven't really started trickling, and we are already seeing a very good effect on the top lines and the bottom line. So it's very heartening. One humble request from my side is, we being a 2-decade-old company, it was also very heartening to hear from you on the demand side of the business, that the number of ad agencies are going up. at some stage, I request you to come out with, I'm sure you must be working on the background on a wonderful demand solution. I'm sure at some stage we will be there. And that is a request, and I will leave it at that.
Okay. Thank you, Ray. Point taken.
Thank you. Thanks for this.
Thank you, sir. Next question comes from Indu Shekhar, an individual investor. Please go ahead.
Oh, thank you. Hello, sir.
Hello. Is this
Hello,
Vijay
sir.
or-
I'm Indu Shekhar.
Oh, sorry.
Yeah.
Hi, Mr. Indu. How are you?
I'm good. And
Please go ahead, sir.
I have to say, start with a congratulations for this tremendous figures in the September quarter.
Thank you.
One small question I have is, from an investor's perspective, I know and I understand the company's financial standing is very important.
Yes.
But equally, the shareholding pattern has to be seen. I find there is a decline in the promoter shareholding by around 15% in the last quarter.
Perfect. Great question. This is a question that I was meaning to address.
Yeah.
Let me be very clear. Not one share has been sold. So it has nothing to do with promoters trying to sell or anything. Let's take a simple example, sir. Let's say I have 100 shares, of which promoters hold, say, 40 shares. Then I add another 100 shares. The promoters still hold 40 shares. On 200, they are 20. Now they have gone from 40% to 20%. Their holding has not changed. It is just percentage of the total. And there has been, confusion on this. So I thought it is important to clarify that. There is not any reduction in promoter holding. It is just that you added additional shares.
Okay.
This is looking as a smaller percentage.
Okay. Okay. One more question. Now that Brightcom Group has been included in the MCSI Group for small cap.
Yes.
What is the prospect for the company to get FII investment?
We are working on that, but again, it has to. The way to look at it is, we do have, we are meeting with analysts of these FIIs. We do have FIIs who are coming in the next round. And there will be more FIIs going forward who will come forward. And we've been talking to some analysts with some very large, bankers and who are working with these FIIs. So this is all work in progress. It will happen. I don't want to get too concerned about it. I think we need to stay focused. My approach has been we need to stay focused on the business, get things together. All the right people will come. There's nothing to be concerned about.
Okay.
That's how I look at it.
Yeah, thank you. One last question. So, checking the financial things of this company.
Yes, sir.
Yes.
I couldn't hear you. Can you repeat?
There is a low dividend payout over the last few years.
Correct.
Despite the company showing improvement in business and profits.
Correct.
What is the reason for this, sir? Why dividends are not being announced?
There are small dividends. Like I said, our free cash flow was tight. And that's what I've been hammering on in my entire call today.
Yeah, I understood.
So that change is going to change a lot of things. Okay. And you do have to keep in mind we are not a cement company that is stagnated. That all the additional cash, we don't have efficient way to improve it. See, as a shareholder, you have to balance it, sir. You have to see from this perspective. Important is yes, there should be dividend. Dividend versus improved value of the share price. What would you prefer? That's the question back to you. And that is a happy neutral as the management we have to manage. So the question sometimes is if you're not giving dividend, do you have cash flow? So when there is cash flow and if you want to use the cash flow efficiently to improve the size of the business, resulting in a bigger value of the share, I believe that is better for the shareholder. That said, there should be always some amount of dividend. So that trade-off is important in my view. So again, in the past, we were very focused on getting rid of all the debt. We become a debt-free company. March 1st, zero debt in the company right now. Now we feel very strong. The timing was incredibly good for us because all markets came together, all parameters came together at the right time. So, very glad about that. Had we continued to pay dividend and continued to keep the debt, it would not have been smart for us. So I think that would be different going forward, sir. That was just a thing of the past. Hello? Hello?
Hindushekar, sir?
Okay, yeah, let's move to the next question.
Sure, sir. Next question comes from Bipin Babu from Cisco. Please go ahead.
Hi, Mr. Suresh Reddy.
Hello, sir. How are you?
Yes, I'm doing great, Mr. Reddy. How about you?
I'm doing good. Please continue.
Excellent. Well, first and foremost, thank you for giving a brief overview of the financial prospects. And I would also like to congratulate to Brightcom Group management and all the investors. Well, we have been performing exceptionally well for the past 1 year or plus. And I did have one important question here, Mr. Reddy. As you mentioned in your update on Brightcom acquisition, the work is ongoing, and we are currently in the process of signing the legal agreements, right?
Yes.
So the last time I remember during the last conference, you did mention that we are almost done 65%. So can we consider this time, that we are almost close to 95%? Because this would certainly make a huge difference to all the investors.
Yes. I see where you're coming from. I understand. I take your poke. No problem. It's all right. It's no problem. Yes, I did say 65%. I try to be, as realistic as possible with a positive mindset. So things moved very well in the early stage. And so we were at actually 65% of the DD. DD is done, sir. DD is completed. That was 65% of the due diligence. 100% of DD is done. Now we have entered a different stage where we are negotiating what is called a share purchase agreement, SPA. That's a legal agreement for transfer of the shareholding of the acquired company. That is the acquisition document per se, the legal acquisition document. So once the lawyers from both sides come onto it, there is a time they take normally where they negotiate all the details. Whether you should leave so much money in the bank, how many employees, how do you hold your employees in the future. There are a lot of nuances as a company that we have to take into account and not do it in a hurry. So that is the reason the process takes time, and we are okay with it. So it's just in the next stage. That's the point.
Excellent, sir. Excellent. I think that was, the only question that I had. And again, I wish all the best to every one of us. And, looking forward for more success to Brightcom Group and, all the investors. Thank you.
Thank you very much. Thanks a lot. Great call.
Thank you, sir. Next question comes from Ashok Agarwal from Technip. Please go ahead.
There was some work in progress in the acquisition of a digital audio company in USA.
Yes, sir.
So, what is the sort of where are we? At what progress level we are there, and when it could be sort of concluded? Maybe 8 months, 1 year, like that. So we don't know how long is the process. So, is there any indication about that?
Yes, I'll talk about that. So the digital audio, we announced that we want to get into it aggressively. We started to do work there. In fact, doing some business there. It's a higher margin business compared to the rest of the business. So it's exciting for all of us. There are some, like I said, there is a time is very critical of essence. Hence, we decided to do an inorganic growth in this space. So we have gone through various strategies on what would be the right fit to start and what is it that we have to do going forward to make this a viable and strong division of Brightcom. So this is how we are approaching it. Now, coming to the acquisition itself is one of the points that needs that is needed to make this a reality. Other point is, you might have seen we announced a leader who's coming on board to give more attention. So that management is very serious about making this happen. We are paying, a senior leader to come on board to handle that. And there are, bunch of things that we are looking at. We have a few potential companies which are, again, we don't want to go with just one. We have to have multiple alternatives. And one of them, we will decide, as soon as we decide, we'll let the market know. And then again, the process starts. We have to diligence their claims of revenue, claims of business, claims of reputation, and all that good stuff. And then there would be a legal agreement, and then the closure of that acquisition. So this is the process, sir. Timeline-wise, some of these are predictable, some of these are not. See how long it takes to find the right combination. We've been talking about it now for good 4, 5 months, 6 months now. So again, part of it was strategizing, part of it, in fact, I was meeting with my Chief Strategy Officer, Brad Cohen, and Mr. Chiti. We had a very long conversation on where we stand, what we need to do now, what are the next steps. Then we've had, again, this week I had 3 calls trying to understand the status of where we stand with various potential targets that we are working on in this space. One of them will come out and we'll immediately let the market know. As soon as we sign a letter of intent to go forward with one of them, that will be informed to the market. So that time frame is very hard to realize. We do not want to do anything in a hurry. We want to take our time, make sure that it is done right. So we have announced that we are getting into this space. We are taking all the right steps. So that I cannot comment on. Once the LOI comes, it will take 3 months to 4 months for the due diligence, another month to 2 months for the share purchase agreement or the final agreement to close. This is broadly the timeline. The first part I don't want to comment on because unless you have something concrete, it will not be proper for me to give you a number on it. I hope that gives a little more clarity, while I may not have an exact answer for all your questions.
No, it has given very good sense of what is the direction towards it. So, thank you very much. Thank you very much.
Yeah. Thanks a lot, sir.
Thank you, sir. Next question comes from Pudukot Krishnan from Formula One Management Consultants. Please go ahead.
Thank you, Mr. Reddy, for wonderful Q2 results and also your detailed information about the stage of the new system.
Thank you.
As well as on the Duam case settlement. Just to understand a few things, what would it mean for the company with the Duam settlement? Number one.
Can you repeat the question? What would it be?
What would it mean for the company when the Duam settlement happens in terms of the financials, in terms of the prospects going ahead?
Oh, what would it mean? Oh, okay. When the DOM settlement happens. Okay. Like we announced when the DOM settlement got, when we had to separate Lycos from it, it was an impact of about 10% at that time. See, really what is important is once we get Lycos back, there is a lot of things that we can do. One is, of course, the brand itself. Lycos has a recognition. It's hard to put a value on it, but it would help. We have actually derived some, benefit out of that anyway. But that said, it is something that will close a long outstanding unnecessary legal dispute that needs to be closed and move on. So it is less of a burden or a headache that should come back in future. So we want to close it for that one reason. Secondly, yes, it is the publisher. There are ways that we can rebrand things. We launched Lycos Life, for example. There are ways we can use the brand recognition to bring out other products around that. I don't think we'll go deeper into search because it's a space that is occupied by the largest companies in the world, such as Google and others. So I don't think we will try to go too much into that. It has a presence, it has an existence. That is fine, but we will try to leverage the Lycos brand recall. As an example, wherever you go across the world, and especially when you're meeting people who are, early 40s to, 50, 60, they've all heard of Lycos one time or another, or they've had email with them. They all know. So it's a great door opener to do some new interesting stuff. And plus also from a B2C, a consumer recognition perspective, it will be a nice comeback kit. So we have some ideas there. We'll see, once this is done, we'll have some, a brainstorm on how to take that and leverage it. From the perspective of legal settlement, it is important to close what is outstanding. That is the first act why we feel it's important to get that settled.
The second question is, the Q2 results, the auditor has stated out that almost a significant portion of the financials are coming out from overseas subsidiaries, and those are not audited, and they have relied on the management representation. Now the question is, why would it not be a better thing that you get those audited, so that there is, for a company that is now on a beginning to attract a significant investor interest.
Yes.
And also, now that it has got into MSCI list,
yes,
would it not be an ideal thing to get those audited and present a picture which will be more comfortable to the investors?
Okay, good question. See, the audit happens only once a year. Okay, so I think there's some misunderstanding. The audit happens once a year across the world by auditors from that particular subsidiary or that nation where the subsidiary belongs. The review is done in India. So this review is done by the Indian auditor. So this is a limited review report. Obviously, they can't talk for other people. They are reviewing from the Indian perspective. This review they're talking about is limited review for quarter 2, which they have reviewed mainly what is in the standalone, and they have got rest has come from the management is what they have said. So just for clarification purpose, the audit happens in every subsidiary in that local geography annually, which is no different than what has happened, and most listed companies follow the same process.
No, I agree, but what I'm saying is, can they also not do a limited review so that the auditor can present it that way?
Usually, it's definitely reviewed by but the limited review certificates have not been, from a compliance perspective, we give for the parent usually. Let me look at it. You have a point. Should we get limited review letters from all the auditors? We have 14 subsidiaries, which will delay the whole process a lot. So it gets complicated. Let's see what we can do. We will discuss this point.
Number 3 question, which is very important. The company has been throwing up a very good cash flow over the last many years out of the operating profit itself. I agree that the loans have been repaid.
Hello? Hello?
Yes, sir, you're audible, sir.
Mr. Krishnan?
Mr. Krishnan, please respond.
Yeah. So I wanted to know, where was the need to do a preferential issue at this stage at such a valuation which you use?
Okay. Okay, I think I understand the question. I'll try to address it the best I can. Looks like you're having a bad connection. I think the question is, in the past you had such high cash flows. Why did you have to do a preferential issue? I have said that along my entire presentation, the cash flows were tight because the receivable cycle between receivables and payables has been long, and hence, the growth has been stagnated, and hence we decided to bring in additional capital to jumpstart and take advantage of a growing market, which is what you are seeing now. It is one of the results of what has been done is what you are seeing now. So hence, I think it's the right thing that we did. Plus, it also helped unleash the value of the entire business. So I don't think it's a bad decision from where we are seeing. Obviously, everybody has their perspective on how it should be. So with that, let's go to the next caller, please.
Now, can I have one last question?
No. Go ahead. I thought you were gone. Okay, continue. Please.
No.
Sorry.
See, just the thing. See, your website doesn't have any conference call script since 2016.
Correct.
Now, it would be a better thing to have it posted instantaneously after the con call or maybe a couple of days after the con call so that it goes for those who are missed out for the previous years, it is available.
Yes, sir. There are reasons why we could not do it in the past. Once the DOM settlement is done, we will restart it and we'll post the past ones also there. Right now, I'm unable to do because of other challenges. And by the way, legally, it is not required for us to do a conference call, but we have been doing conference call quarter on quarter. And everybody who's been seriously interested, we have a very long-term, investor following for years now, who have always been coming on the call trying to understand. That said, we could not publish those because they were used, some of the details from that call were used in situations which were not comfortable since we had some outstanding legal disputes. Now that is settled and closed, till that is signed, we don't want to put it up. Once it is done, we will put up all of them in one shot. So just expect to see that going forward. Okay, sir. Let's go to the next one, please.
Thank you, sir. Next question comes from Milind Malhotra, an individual investor. Please go ahead. Mr. Milind, please respond.
Thank you for dialing in. Can I have a name and your company name, please? Caller ID 831-811-3187. Can you please respond, sir? How are you? So caller ID 831-811-3187. Can you please respond, sir?